markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg, with the 10-year now yielding 3.93%, the 2-year 4.39%, the Dow higher, 65 points higher, up by 0.2%. We do have the Dow trading at a record. S&P up 4 to 4711. That is a gain of 0.1%, but a retreat right now for both NASDAQ and the NASDAQ 100 index. NASDAQ is down 7, a decline there of less than 0.1%, while the NASDAQ 100 index is down 55, a drop there of 0.3%. The rally in stocks driven by the Fed's dovish tilt yesterday and bets on a soft economic landing lost steam on speculation that the market may have gone too far too fast. In the meantime, Kristen Bitterly is head of investment solutions at Citigroup Global Markets. She's analyzing yesterday's Fed decision.
Really, I think you have to break down some of the things that he said that were pretty definitive. So the idea that the Fed is done raising rates for now, the fact that this was the first time that he really gave a nod to the trajectory of inflation and the fact that it is easing, and the last part was he was very dovish in his messaging. So even when given the ability to almost acknowledge some of the loosening of financial conditions that we've seen over the past several weeks, he actually didn't bite at that apple at all.
And you can hear more of the conversation on the Talks podcast. You can download it wherever you get your podcasts. Spot gold up $4.50 the ounce to $2,032, up now by about 0.2%, while the price of oil, crude, West Texas Intermediate, now up 3%, $71.52 a barrel. Job cuts at Cruise, that is the autonomous vehicle unit majority owned by GM. It is cutting 24% of its workforce, extending a sweeping overhaul of the business after dismissing 9 top executives. Shares of General Motors, they're up now by 6.3%. Again, recapping, stocks are trading mixed. The Dow, the S&P, they're both higher. NASDAQ lower, little changed on NASDAQ, down about 0.1%. S&P up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
When we all come back from the holidays, it'll be just, 2 weeks till the Iowa caucuses, right? So you look at this poll today, they're within the margin of error, although we're clearly looking at momentum deteriorating or slowing for Joe Biden here. Donald Trump on the rise, specifically in the state of Michigan in this latest poll out today. So 2 weeks, you come out of the New Year's holiday, people start paying attention, again, presumably in Iowa where they're going to be caucusing, and you wonder what these campaigns are going to look like.
Maybe they'll ramp things up. Bloomberg has reporting today, our very wonderful Nancy Cook, suggesting that the Trump camp is ready to go full steam ahead in those first 2 weeks of January, dump a lot of resources into Iowa, maybe just try to cement this thing, as he still far and away is the front runner, even if there is some momentum for the likes of Nikki Haley.
So we get ready for the Trump Iowa blitz, as Nancy puts it, on the terminal to vanquish his rivals and bring Mark Niquette into the conversation. A Bloomberg national politics reporter. It's been a while, Mark. Great to see you back in Washington. We try to pull you in here every time you're in the Capitol, and you've spent a lot of time at Trump rallies. In some cases, like a caged animal, which is what they do with reporters at these things. Is this really all it takes? Ron DeSantis went to every 99 counties in Iowa and has so little to show for it, where Donald Trump's going to show up in the last 2 weeks and own the caucuses? Is that what happens here? What's the lesson for a guy like Ron DeSantis?
This has been the story of this primary, that it doesn't really matter what Ron DeSantis or anybody else does, or frankly, what Trump does. He just does not lose steam. In fact, the Des Moines Register poll came out this week, showed him above 50%. So presumably, he's got the caucuses locked up if you pull all the other votes together, if they still don't beat Trump.
Well, in the conversation we were having, say, 6 months ago was, sure, Donald Trump can easily win the Republican primary. The general election, though, very different story. Now it feels like we're talking about a general election, and we're looking at polling, like our Morning Consult Bloomberg poll that came out today, that suggests, in fact, no, he probably could realistically win a general if what we're looking at is the key swing states that may ultimately decide who gets the presidency.
Right.
So he really has nothing to worry about here at this point, right? I mean, he's just kind of cruising.
Presumably, unless something unexpected happens that, somehow he does not do as well as the polls suggest in Iowa. I think everybody was sort of looking to Iowa to see if, there was any kind of chink in Trump's armor. Because you're right, the expectation was if Donald Trump wins Iowa and pretty decisively, it means he's probably going to win North Carolina pretty decisively, and then it's, for all intents and purposes, over. You just can't see somebody else emerging after that.
This could go awfully quick. Our reporting says that this will kick off, the Trump blitz in Iowa kick off in the next week with stops planned in the cities of Council Bluffs and Cedar Rapids. It will accelerate in those 2 weeks I mentioned into the new year. The king of free media or earned media, right? Does you just line up a bunch of rallies and buy no ads? Do you have a sense of what else this blitz might bring?
Yeah, I think it's going to be mostly appearances.
Yeah.
There was some talk of having a bus or some kind of vehicle to get some more attention.
Just a Trump bus tour, right? We have like a gilded bus going.
You can't
down
imagine Trump on a bus, though,
sir.
right?
Yeah. No.
But the reality has been he hasn't had that many campaign events in Iowa. I mean, to your point, compared to Ron DeSantis, who's been to all 99 counties, I mean, Trump has had relatively few events in Iowa and New Hampshire, and he'll ramp it up at the beginning of the year, but it'll be sort of a departure from what he's been doing the last few months.
Donald Trump might not run around on a bus with a big picture of his face on it, but Trump supporters might. I mean, when I was in Miami, when he was being arraigned at the federal courthouse because of one of the many criminal trials he's about to face, there were people who had Trump pasted on their cars, on their trucks, flags, shirts, which just kind of is a reminder of this core base of support that has never really gone away. So even if someone like Nikki Haley were to do well enough in Iowa, potentially could do something, pull something off miraculous in New Hampshire, does it even matter if that base will not stray from him?
Right, and all along we've been trying to figure out and watching to see in these actual voting elections what the size of that core Trump constituency is. Because you're right, presumably it's a number out there of folks who are just dedicated to Donald Trump. Does not matter what happens, they're going to vote for him. They're not even going to consider anybody else. But the question was, how high is that number? Is it 35%? Is it 40%? Is it 50%? And the closer it gets to 50%, obviously, the less it matters for whatever anybody else does.
A lot of this is going to ride on the economy, of course, for Joe Biden. And the picture is actually pretty good right now. You've got the market at an all-time high. And we remember what Donald Trump was saying. This is, I think, back in 2019. It's been retweeted a few times. There's always a tweet, as they say. I think Aaron Rupert put that up on Twitter, where he said, how could they be impeaching me when the stock market's at an all-time high? How come that doesn't help Joe Biden? You said 37,000. Nobody mentions him.
Yeah, that's the other enduring question about this campaign so far, and that is, why doesn't Biden get any credit for? It's not only the economy, improving. Our polling shows, overwhelmingly voters think the economy is still going in the wrong direction, even if the economic indicators suggest it is. Biden passed this sweeping infrastructure bill, CHIPS Act, all this investments going on in the economy, and he's not getting hardly any credit for it.
Well, he went to the picket lines, joined the UAW, calls himself the most labor-friendly president in American history, and still is struggling to get the support of union members. In Michigan, he's trying to relieve student loan debt. Still, our polling suggests that Gen Z doesn't think he's doing enough on student loans. What, if anything, is actually working for him with who is supposed to be his core demographic of electors?
At this point, not a lot. And I think this is the big concern for Democrats because, as to your point, you look at all these constituencies, he's not doing well in any of them. In fact, he's starting to lose support in really core constituencies that he needs, like young people. Our poll that came out this week showed that he's lost significant support among young people, particularly in a state like Michigan, where he needs a good vote from young folks to get the statewide vote. So I think it would be troubling for Democrats that they're not seeing movement sort of in any constituencies that they need.
Suburban women, too, black voters. I mean, kind of anywhere you look, Joe, you're starting to see a little deterioration.
Big time. And when you look at the cause and effect here, or the however, suburban women after Roe v. Wade, after what we saw in the midterms and the specials, union workers after becoming the first president, to your point, to walk the picket line, it does make you wonder. Although I have to admit, Mark, I think we all overplay the impact that a president can have on the stock market, right? Maybe they shouldn't get a lot of credit for an all-time high.
Yeah, you're right. I mean, you remember Donald Trump, he would take credit anytime the stock market hit a high point, but you never got a tweet when the market fell, right? Because that was never his fault.
Yeah, I don't think that's going to change either. It's nice to see you. Happy holidays to you. Come back and see us in the new year. Mark Niquette with us, politics and government reporter at Bloomberg here in the nation's capital. I'm Joe Matthew, alongside Kaylee Lyons. With more to talk about here, we were wondering actually if Michael McKee was going to be able to get back to New York following his reporting here in Washington. Kaylee, I was talking to him in the lobby. This is how I found about this. It's like, all news is local.
Yeah.
And he was pleased that, I guess he got on an airplane because there's been a bull on the tracks.
Yes, quite literally.
Yeah, that's not a euphemism, by
No,
the way.
a bull on the tracks.
In Newark Station?
Correct.
Okay, so here's the good news here is that they have found the bull. But this thing was walking around for a long time, and that's like a repeating bull. Yeah, that's what it sounded like in Newark today. Begging many questions like, well, where did it come from? Are there a lot of bulls in Newark?
Right.
How did they get it? And apparently we have answers to all of these questions now.
Skylar Woodhouse does, at least, because I still have a lot of questions. She's joining us now.
Skylar, how did you get this assignment, first of all? Was this like a jump ball, or did someone in the newsroom say, Skylar, this is the story that you've been waiting for?
I think it was funny. I think at first everyone was like, is this real? Is this AI? Like what's going on? Because that's where our heads go these days.
Yeah.
But then they were like, okay, we should probably do something. So here I am, writing about a bull.
Wow.
Well, of course, because you cover transports,
Exactly.
and you've probably talked about a lot of issues that New Jersey Transit has had recently and over the course of many years, but this is kind of a new one. So where did it come from?
That's a great question, and there's still no real answer as to where it came from. There's a lot of kind of conspiracy.
I thought we had an answer.
Sadly, no. Sorry to
wow.
disappoint. There's
All
a
right.
lot of conspiracies kind of going around. Is there like possibly a local, I don't know, farm nearby?
Says the price hikes that they implemented violate terms of the Inflation Reduction Act. National Security Advisor Jake Sullivan is in Israel today, speaking with high-level officials there about the military campaign against Hamas. The State Department's Matthew Miller refused to go into specifics, though, about the strategies that are being discussed.
We have these conversations with our Israeli counterparts at a range of different levels and talk with them about steps we think they can take to minimize civilian harm. We've seen them take some of those steps. There are always things that we think that they can do better, and we'll continue to engage in conversations with them to that effect.
Miller says the U.S. continues to press for another pause to allow more hostages to be freed. Russian President Vladimir Putin is back to holding his marathon end-of-the-year news conference for the first time since the invasion of Ukraine. Bloomberg's Greg Sullivan was monitoring from Warsaw and says the issue of detained Americans did come up.
We heard about a potential prisoner swap for detained Americans, Evan Gershkovich, who's a journalist with the Wall Street Journal, and Paul Whelan, a former Marine veteran. Putin said that he was seeking an acceptable deal for his side. So very interesting, especially since a court this morning in Moscow ruled against releasing Gershkovich early.
Bloomberg's Greg Sullivan reports the war in Ukraine also came up early at the news conference. Putin says the war will continue until Russia achieves, quote, denazification, demilitarization of Ukraine and its neutral status. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
All right, Nancy, thank you. As we make our way into the throes here, we've got important stuff to talk about. We talked about the bull already.
What can follow the bull?
Well, they came out with, this is something that I've been looking forward to talking. We had the word of the year from Webster's. We had the word of the year from Oxford. Now we have the top search of the year. Did you see this today? Google Trends out with the top search of the year, and Joe Biden is not going to want to hear it. It's not where's Hunter. It's why are eggs so expensive?
Really?
In every state in the country, this was the question that people were asking. In all 50 states and D.C., eggs topped its rankings. Having peaked in January at almost $5 a dozen, we're now just over $2 a dozen, Kaylee, according to the CPI that just came out. But Bloomberg is now reporting, we've got this story in the terminal, get ready for $5 eggs again. A flu outbreak, a bird flu outbreak hit Cal-Maine Foods in Kansas.
Oh, wow.
They have 684,000 egg-laying hens, and they are potentially now sick.
Well, and here's the thing, Joe. What's the president of the United States supposed to do about a bird flu? But people are going to go to the grocery store.
Yeah.
See the price of eggs.
Go back to Google, and they'll write, "Where's Hunter?"
Well, maybe.
Now, as this is unfolding, the question about milk and how whole milk should be used and whether students in public schools should receive whole milk has been the basis of a monster debate, including chocolate milk on Capitol Hill. Virginia Fox, the congresswoman, says, what about Santa?
The nutrients in whole milk, like protein, calcium, and vitamin D, provide the fuel Santa needs to travel the whole globe in one night. Whole milk is the unsung hero of his Christmas journey. Protein helps build and repair Santa's muscles. Hoisting heavy sacks of gifts up and down the chimney is no easy task.
So that's the workout regime. Yes.
No easy task.
No easy task.
Who wants to tell her? So we're basing the milk program for kids on the fact that it gets Santa through the night.
Santa's got milk.
It is pretty remarkable how quickly he does that job. Virginia Fox.
If whole milk is a good option to fuel Santa's extraordinary Christmas Eve journey, then why isn't it an option for American school children in their lunchrooms?
It's like a war on Christmas in reverse. I'm sorry I did this to you. I didn't tell Kaylee I was going to go here. Yeah, that's right. She said Santa's muscles, Brendan. I don't know what to do with that.
It's a heavy sack.
Maybe it's good the house is going
full
home.
of presents.
Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a good afternoon, everyone. Happy Thursday, live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and Bloomberg Originals. It's Thursday, December 14th, 2023. I'm Tim Stenevec, along with my co-host, Bloomberg News cross-asset reporter Emily Grafeo, in for Carol Masser this afternoon. Well, the rally in stocks that was driven by the Fed's dovish tilt and then bets on a soft landing kind of fizzled out earlier this afternoon. This after some pretty furious buying this morning. The 10-year yield, though, is below 4%, down from 5% in October. And, this morning's readings on retail sales and jobless claims, well, that reinforced the soft landing narrative. Emily, you've had about 24 hours to kind of digest what we heard from Fed Chair Jay Powell. You thought it was going to be boring.
That's right.
It was not boring.
I was very wrong. And I was pleasantly surprised because then I had something to write about.
That's good. I appreciate that. It was good.
Yeah, I mean, it's been pretty incredible to see the rally and just to see how many people thought that it was going to be boring and now have been piling into stocks. It is fading a little bit, though, the rally that we saw in the S&P 500 earlier today.
Well, we've got a great roundtable on equities and fixed income coming up in just a few minutes. Abigail Doolittle and Michael McKenzie are standing by. We're going to go to them in a few minutes for all the details in the equity and fixed income markets. Also, today's big take and a most read on the Bloomberg terminal, it's about the crisis that small private colleges are facing in the wake of a massive shift in demographics. Here's a little bit of a hint. More college closures are coming. And we're going to be speaking to the CEO of the Nuclear Energy Institute. It's the Nuclear Energy Trade Association. She's going to join us to make her case for going nuclear on climate change.
I like that.
Yeah, it should be good. Hey, this is a good one in the magazine. It's the cover story. Who knew energy trading could leave you at the edge of your seat? It's a gripping tale of how energy traders left a country out in the cold. It's the cover of the new issue of Bloomberg Business Week. It's on newsstands now. Also, the latest Bloomberg News Morning Consult poll. Emily, it's more bad news for President Biden. We're going to explain a little later in the program about those exclusive results. This one has to do with student loan debt. Well, a quick check of the markets. The Dow Jones Industrial Average higher by 0.3%. The S&P 500 up close to 0.2% right now. The NASDAQ Composite up just fractionally, 7 basis points as we speak. Don't go anywhere, though. We got a great program over the next 3 hours. First, though, we're going to be checking in with our TV team. We got Romaine Bostic and Katie Greifeld standing by. We're going to bring in our TV colleagues because Bloomberg's countdown to the close starts right now.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Tim Senevic, Emily Grafeo in today for Carol Master. Welcome to our audiences in full across all of our Bloomberg platforms, television, radio, originals, and our partnership for those folks streaming on YouTube. A bit of an extension of this rally, though I do think the interesting things, Tim, about the extension of this rally, that it really is kind of leaving the big caps behind, and this is all about the small caps and cyclicals.
Yeah, it's broadening out a little bit. We're actually going to be speaking with Abigail Doolittle all about that in just a few minutes. I'm also keeping my eye on the bond market because we're seeing the 10-year fall below 4%, and in fact, earlier it was below 3.9%, and that got me thinking about mortgage rates, and the good news for us is Thursday is the day that we get an update on what mortgage rates are doing, and here in the U.S., mortgage rates have finally slid below 7% for the first time since August. 7% is, here's my question, like that's a big deal, but at the same time, it's higher than the average over the last decade, significantly higher. And Emily, I wonder if it's actually gonna move the needle and get people who are, sitting on these 4% mortgages to say, wait a second, okay, now I could be selling my house and getting more inventory on the market because this market's just been in a real stalemate.
That's right, Tim. I mean, we talk about a loosening in financial conditions, and to see these mortgage rates come down, it is really an example of that, but you're right. Is this really going to move the needle on supply? If we do have more demand coming in as more buyers step into the market because those rates are lower, is it actually going to cause those people who are locked into those lower mortgage rates to actually sell their homes, Romaine? That's still unclear if this really is going to provide any relief for the housing market.
Well, I mean, I've shown a chart to our TV audience before we came to you here that kind of showed the differential between where mortgage rates are right now at basically about 7% and the effective mortgage rates of all the mortgages that are outstanding. That effective rate is still right around 3.1% here. So that's what a lot of folks are going to have to contend with, that if you're sitting on a home right now, you're basically paying on average probably in that 3% range here. Do you want to swap that out for 7% mortgage?
No.
6%?
No.
5%?
No.
4%?
Keep going down.
Okay.
I think you want to swap it out for 3.1%
Tim ain't going for it and getting out of
mortgage.
bed for anything above 3%.
Yeah, I think here's the other problem, though, is that when mortgage rates go down, typically, this is typically the way it works. It's not the way that it's worked out over the last couple of years, but when mortgage rates go down, houses get more expensive. When mortgage rates go up, houses get less expensive. We haven't seen that happen because of that lock-in effect that you're talking about, Romaine. So I don't see what gets the housing market out of a stalemate.
We need to move on because we have something really important to talk about, and that's what happened at Newark Penn Station today. I'm sure
you're
you
just
guys...
from New Jersey, Katie, so you want to talk about Penn Station.
This is a global story. This is a global story, Tim. There was an actual live bull that was released on the tracks. It was loose on the tracks. It's since been recovered. Let's get that out of the way now. It's been contained apparently inside a fenced lot, but this was incredible. I thought it was a joke at first. It just seems a bit on the nose, of course, after the Fed and the big rally that we saw that we had a bull running loose in Newark Penn Station. But this was real. It's unclear where the bull actually came from, but as you can see there, it is safely in a trailer.
What do you mean no one knows where it came from? Did no one know that they were missing a bull? Because they're pretty big. I feel like if your bull is gone, you would kind of notice that.
I'm sure that someone is trying to reconnect with their bull.
I'm confused. So they put this into a back of a truck here, and I see we have helicopter footage.
Oh, you have to.
This is like the OJ chase all over again.
Yes.
But I'm curious, could they not have just put them on like a New Jersey Transit train?
No, definitely not. Did you see the horns on this thing? I mean, I want to know what its wingspan is because it's a beautiful animal.
Okay, well, given the bullishness that we've seen over the last 7 weeks in equity markets. Animal spirits. It's a lot of bull. That's pretty much just kind of makes sense, and I think one of the reasons why people couldn't take their eyes off of this. But really, it's the fact that it's a bull running loose in New Jersey.
It's all I want to talk about.
Yeah, I know, and I didn't want to talk about it, but you won, Katie, and we got to talk about it. So, Romaine, did you want to talk about it?
No.
Okay. You did? Okay.
Cool.
There we go.
I wanted to talk about it.
Emily wanted to talk about it.
Thank you.
There's
I guess the big question, which none of you have answered here, are people going to be able to get home tonight? Is the bull's gone?
They're not going to be able to get home.
Are the trains back and running? For New Jersey Transit, that means are they running as slowly as they would normally run?
New Jersey Transit said in a tweet, service is operating on or close to schedule with residual delays.
It's still New Jersey Transit.
Residual.
It's still New Jersey Transit.
Did they just dust off the same statement every day, I assume, right?
They too.
Yeah.
Hey, we got to go, but don't worry, we're going to be back together, all four of us, a little bit later in the program, live on TV, radio, and YouTube. Also on Bloomberg Originals, 4 p.m. for Beyond the Bell when we take you through today's market close. All right. Well, the great monetary pivot is near as central bankers engineer a once unthinkable soft landing in the world's largest economy. I think to a lot of people, that's the big picture takeaway after yesterday. The Fed gave its clearest signal yet that its historic policy tightening campaign is over by projecting more aggressive interest rate cuts in 2024 in the process of igniting one of the biggest post-meeting rallies in recent memory. We're going cross-asset. We're talking stocks with Bloomberg News markets reporter Abigail Doolittle. We're talking bonds with Bloomberg News rates reporter Michael McKenzie. They're both here in the Bloomberg Interactive Brokers studio. Michael, I want to start with you with the rates moves. So is that it? The Fed's just completely done and 5% was the top of the 10-year?
That's it.
That's it. All right. Interview over.
Yep.
Thank you for your answer.
No, I think Waller laid out the game plan, and clearly he's the intellectual force driving this Federal Reserve. And I think there were a couple of times yesterday when journalists were asking Chairman Fed Jerome Powell whether, giving him an opportunity to walk back and sort of say, hey, the market's run too far. He just served up the sort of dovish pivot on a silver platter. I mean, the market's run, and it's going to keep running now. Because, and frankly, the rate cuts starting as early as March, it's on the table.
You've written multiple times this year, Mike, because I've read these stories about how traders have been burned by piling into bets that we're going to get rate cuts. Are we in the same situation now, or is something different this time, where you're not going to be writing that story in 3 months from now?
Well, to be honest, that story changed once we got above 5%, because the risk-reward of buying treasuries with a coupon of 5% were very compelling. And we wrote about that in October. And when I went out to Los Angeles and Southern California to talk to bond managers in November, they were optimistic that they were on the right side of this trade. Mm-hmm. They were loading up on bonds above 5%. I guess at the time they didn't really think we were going to get this kind of pivot from the Fed. But it's here, and I think it's here now because the data is cooperating. We are slowing. True, the market has been ahead of this. I think Deutsche had the research saying is seventh time a charm.
Yeah, something
and
like
it does look like seventh time is going to be the charm, because the Fed is telling you that they want a soft landing. They will start easing. I thought one of the more compelling lines from Powell yesterday was when he said, we can't wait to cut rates. We can't wait for inflation to get to 2% before we start cutting rates. He's telling them we're going to start cutting pretty soon if the direction of travel and inflation is down towards that sort of 3%, 2.9 handle. So I think the bond market here is in good shape. I think you're still going to have volatility, because all it'll take is another, sticky sign of inflation early next year, and suddenly there'll be a backup. But I think what's really compelling now for the bond market here is that you've got $6 trillion of money sitting in money market funds. They now have to make the move. They missed the boat back in November when yields are at 5%. You could have locked in a 2-year at 5%, 5-year at 5%. That's gone. Now, the highest yielding coupon on the Treasury curve today is the 2-year at 4.40. Pretty much everything out, apart from the 30-year, is below 4%. So any backup in yields from here is going to encourage people to start saying, I've got to start shifting from cash. And that's a huge amount of money sitting there.
Yeah, the question is where they actually shift that cash. I want to bring in Abigail Doolittle, markets reporter for Bloomberg News. Abigail, I want to talk about the equity portion of this rally. Year to date, the S&P 500 is up almost 23%. As of this morning, we were talking about a new record high for the NASDAQ 100, for the Dow, since pulled back on these, but we're still in that area. This is the rally that caught a lot of people by surprise.
It is indeed. I'm one of them, truthfully, and I've done...
You and me both, friend.
From a charting perspective, the markets had been charting tactically almost perfectly for nearly 2 years, just in terms of the various moves. And when the market started to rally at the beginning of November, the charts did reflect that. But for me, at least, it was really hard to believe it because Fed Chair Jay Powell had been signaling that the Fed was going to stay higher for longer. And even just less than 2 weeks ago, that was still his message. You could make the case that there's two Powells. Now, it's interesting what you're talking about, Tom, in terms of Waller being the intellectual heft and Powell decided to go along with him, or maybe that was the plan all along. We just don't know what their, I don't want to say trickery is, but their strategy is what I'll say. And so I think that a lot of folks had been caught off surprise by this market starting in early November, mid-November, late November, and now certainly yesterday. Now, what makes it very interesting is, so the small cap index is still up 2.6%. You have the NASDAQ 100 now down 0.25%, and earlier today was almost down closer to 1%, so a little bit of a hangover from all of the moving to the upside. But what's really impressive is on the S&P 500, the volume today is almost 70% above the 20-day average. So that suggests that the market's all in on the idea that there is, in fact, a Fed policy change and they want in. So the move up 0.2% really says nothing, but that volume suggests that folks are really repositioning.
I want to go to you with this question, Abigail, and ask the same question to Michael about that $6 trillion in money market funds. Do you think, what portion of that do you think we can expect to go to the equity market and when? And then where do you think it goes if it's not in the equity market? Does it go to the bond market?
So from an equity market standpoint, each of the indexes right now is at a real crossroads. They're basically at resistance. So the selling pressure that has come in, so the NASDAQ 100, it's record high. It's basically now gone back down into the range. We've seen that sort of action a lot of times. It's going to be interesting to see whether or not that money does go into equities to push it higher, or more interested in the Fed. If you can trade with the Fed, I mean, it's stocks too, but bonds, you're trading in the safest asset class in the world. You know that you're backed by the biggest balance sheet in the world. Why not go there? Whereas stocks, there's some risk. Right now, 1 month correlations are higher. The VIX is lower. That's a fancy way of saying that the volatiles suggest that in 2 to 4 weeks, equities could be a little bit dicey because everybody's trying to move from the Magnificent Seven into other sectors. But the problem is the Magnificent Seven, that's 50% of the NASDAQ 100. It's 30% of the S&P 500, so that only goes so far. So I don't know the answer to the question. If I had to speculate at this point, and also technically chart technicals on yields, there's air pockets. They're just going to keep going lower. So I would say probably more so bonds.
Mike, what did you think of Powell's categorization of the loosening in financial conditions? Because he didn't push back on them at all. And I'm curious, what you think he's thinking right now to look at the market action right now.
I think he's, and the other members of the FOMC have discovered that once you introduce financial conditions, it's best just to stay quiet and move away from that. I think it was an error to do that at the last meeting. They've really set themselves in a bit of a trap. And a lot of people have talked about this, even when they did introduce financial conditions as helping them restrict the economy back in November. There were plenty of people in the bond market saying, why are they doing this? And I think he just dodged the question yesterday. He just, I can understand why they did it at the time, but I think it's just too much information from the Fed. And you can't really, financial conditions, the classic financial conditioning tightening we've already seen in the mortgage market. But if you look at the MBA weekly data, people are still trying to get mortgages. At the end of the day, whether you pay 7%, 8%, it's a 30-year rate. You know at some point you're going to be able to refinance much, much lower. And people who buy houses are buying houses with very much a long-term perspective.
And you think about the economy, the number of people who are buying homes is relatively small, even though it has a big impact on the economy, because then they go out and buy couches and they, redo the homes and stuff like that. But I think that's one of the reasons why we heard from Jay Powell over the last year that there have been a lot of Americans who are shielded from those higher mortgage rates because they've locked in those smaller mortgage rates. Abigail, just in the last 30 seconds, what derails this rally?
That's a great question. I think just maybe too far, too fast. And also, there are a lot of people like me who are very surprised by Fed Chair Jay Powell's sudden pivot. To the best of my memory, it's the fastest since December, January of 2018. I think that there's a sentiment out there that wants stocks to go down. whether or not that works or not, I don't know. But I would say too far, too fast. I mean, the NASDAQ 100 this year, in the first half, it was up 40%. It was the most ever. By through physics, parabolic uptrends can't last. They have to at least consolidate.
Yeah, it's pretty remarkable moves, both in the equity market and in the bond market. A big thank you to both of you for joining us for this roundtable. It's Bloomberg News Markets reporter Abigail Doolittle and Bloomberg News rates reporter Michael McKenzie, both here in the Bloomberg Interactive Brokers studio. Emily Grafeo and I are just getting started on this Thursday afternoon. It's Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ are all advancing. NASDAQ 100 index, though, in the red. This update brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments, Let's talk. Visit glenmead.com to learn more. The rally in stocks driven by the Fed's dovish tilt yesterday and bets on a soft economic landing lost a little bit of steam today on speculation the market has run too far, too fast. S&P holding on to a 10-point gain, did turn negative earlier this afternoon, but right now up 0.2%. Dow Industrials up 117 points. That is a gain right now of just about 0.3%. NASDAQ up 19, up 0.1%. But as I mentioned, the NASDAQ 100 index trading lower now, down by 34 points, a drop there of 0.2%. 10-year yield 3.91%, with a 2-year that's yielding 4.38% on the 2-year. Gold up 0.4% at $2,035 the ounce, and West Texas Intermediate crude up 3.2%, $71.68 for a barrel of WTI. Well, a day after that monster Fed rally, how is that shaping forecasts for a rate cut next year? Stephanie Roth is chief economist at Wolfe Research.
I've been calling for a softish landing. Now I think I just have more conviction in that. The fact that they can cut rates even sooner than our base case. Our base case was Q3 of next year heading into yesterday. We've pushed that up to Q2. And that just makes the runway even that much wider for the soft landing to happen.
And you can hear more of the conversation with Stephanie Roth on the Surveillance podcast. You can download it wherever you get your podcasts. The International Energy Agency is slashing estimates for this quarter as global oil demand growth slows down sharply. The IEA sliced nearly 400,000 barrels a day from assessments of consumption growth for the final 3 months of this year. Oil stocks, though, are advancing. ExxonMobil up now by 2.5%. ADRs of BP up 2.2%. Chevron up now by 3.3%. Recapping, stocks are higher. S&P up 10, up 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, like I said, it's today's big take. It is one of the most read stories on the Bloomberg terminal. It's about the crisis unfolding in higher education. It's the pressure that small nonprofit colleges and universities are facing as they bear the brunt of a massive shift in demographics. We're talking falling enrollment, persistent operating losses, and that's led about 10 four-year institutions to close or announce plans to close their doors this year. Fitch Ratings actually predicts 20 to 25 schools will close each year going forward. That's roughly double the annual average of closures at private nonprofit four-year institutions over the last decade. Well, the team here at Bloomberg News did an exhaustive analysis of 100,000 data points from about 1,000 U.S. schools. These schools had fewer than 5,000 students, and they had some pretty surprising findings. About 170 small nonprofit colleges and universities are facing increasing pressure. Nick Carollo is part of that team here at Bloomberg News. He's municipal finance and schools reporter. He joins us here in the Bloomberg Interactive Broker Studios. Nick, a jarring story. I couldn't put it down, partly because I had to search for the name of my small private nonprofit alma mater, which fortunately, to my relief, was not on there. But take us through what you and the team did in this huge data analysis.
Sure. So like you mentioned, I'm a reporter on the municipal finance team, and we cover the debt that these schools sell in the bond market. And for a long time, we had been hearing investors growing increasingly concerned about this industry. So we wanted to write a story in a very data-driven way to understand, how have schools in this world changed over the last 10, 15 years. And the federal government has a very comprehensive database on schools called iPads. So we pulled as much data as we could that could be uniformly tracked over this whole universe, going back to at least 2008, a little bit further back. And we found just that, like you mentioned, because of these demographic changes, there's fewer students enrolling in college, there's fewer students graduating from high school, and that's projected to worsen over the coming years too. Schools are starting to see a lot more stress.
Can you talk about some of the examples of the signs of stress? What does it actually look like when a school is under stress, according to Bloomberg's analysis?
Sure. So we wanted to create some metrics that could be uniformly tracked, and we consulted with 6 different experts to help us kind of create these metrics, and this is what we landed on. So a high acceptance rate, a school is accepting on average over 80% of its applicants over the last 3 years on average. And then similarly, a low yield. So you're giving out a lot of offers, but not a lot of students are accepting those offers and coming to campus. A pretty clear one is just consecutive enrollment declines. Your student body is shrinking year after year after year. And this one's a little more complicated, something called rising institutional aid, which is basically how much the school is discounting the tuition sticker price. And finally, we looked at the core operating losses. Is the school making money or losing money from its core operations when you strip out any of the money it makes on its endowment or investments?
Nick, what's so interesting about this story is it kind of runs counter to the narrative that I think a lot of people have about higher education in this country, which is that it's becoming increasingly competitive, it's becoming increasingly expensive, and it's harder and harder for people's kids to actually get into school. But not all colleges and universities are created equal here. So talk a little bit about sort of the differences and the types of schools that are under pressure right now.
Sure. The way the experts think about this, and I think a lot of school leadership thinks about this, is there is a massive bifurcation happening in the higher education market. The absolute strongest schools, think, your name brand schools, your top 50, those are getting much stronger year after year. They have massive endowments, north of tens of billions of dollars. Some schools have issued 100-year bonds in that category. There's no reason for us to think that they're going anywhere anytime soon. But on the flip side, they have these smaller, they tend to be maybe more regional schools that are seeing the pressure that we're talking about. And I think we've seen a number of closures already, and Fitch, like you mentioned, is predicting more closures in this space. And part of that is just because the demographics are changing. There's more seats than there are students.
What happens when a college closes? Where do the students go? What happens to all the jobs?
It can kind of be case by case. We've written some individual stories about this. One great example is Cazenovia College in New York.
I have a friend who went there.
We wrote about them, and the school had some debt outstanding, which makes it really complicated. If a school has an endowment, for instance, that can also be complicated. Where does that endowment go? In some cases, it has to go all the way up to the state attorney general to decide what to do with the money because donors gave that and earmarked it for a specific purpose. My understanding was that in Cazenovia, they were able to arrange some transfer agreements for students. Usually they get absorbed by nearby schools. The real estate often gets sold at auction or by some outside company, and the money will, depending on, if the school has debt, maybe we'll go back to pay some debt holders. But it's very complicated, and even some of the lawyers I talked to for this story talked about how closing a school is not an easy business.
Nick, this story has serious economic implications as well. I remember when I was in school at my small college in central Maine, it's in a small town, but the economic effect that the school has on the town is just massive. It's one of the biggest employers there, along with the hospital. Students spend a lot of money. Their parents, when they come and visit, stay at the hotels there and eat at the restaurants in the town. What are the economic effects on a surrounding area when a college closes?
They can be quite significant. I think, like you mentioned, hospitals and institutions of higher education are what are known as anchor institutions. Especially in rural places, they can often be the largest employer. You think about not only losing the faculty, but all the staff, the people who maintain the grounds, and this huge flow of students and their families that's coming to the town every year and spending money. If that goes away, that is a sizable economic hit to a region.
In your reporting, you spoke to some students who attend colleges that are under stress. What were some takeaways from those conversations?
Sure. I talked to, so one of the main schools in our story is a school called Rider University. I interviewed their president and quite a few students and faculty members, and they are definitely facing some stress. They hit about 4 flags in our study, and some students talked about this kind of chilling effect that happens on campus. Rider has seen some improvement lately, and I also want to be clear, schools are coming out of the pandemic. That was an extremely difficult period for them, but when students are going through this experience, it doesn't, I think it's hard on them. It's hard on this community. That's in part what schools are selling is an experience in addition to an education, and if there's a possibility that your school may not be here in 10, 15 years, it's hard for you to really build that level of connection that I think schools really pride themselves on.
And get excited about your school. Absolutely.
Nick, in the last minute that we have with you, talk a little bit about the way the schools responded to the analysis here. And just to, emphasize, just because the school's on this list or you and the team identified it as being under pressure has no bearing or indication that it will actually close.
Correct. It's almost impossible to predict a school closure based off of metrics like these. Like I mentioned, a big part of that is because of endowments. If a school has a big endowment, they're going to have a much easier time surviving a period of hardship than a school that doesn't. But we reached out to every school that had 3 or more flags, and we got a vast array of responses. Some schools made the case that, their acceptance is high by design. They're trying to be accessible to, low-income students, and that's why they're increasing their aid. But then on the flip side, there were some schools who totally agreed. I mean, they openly acknowledged that it's a very difficult landscape for small institutions, and they talked about some of the big changes that they're having to make.
Well, it's a really, really powerful piece. I encourage everybody to check it out. There's a reason it's among the most read on the Bloomberg terminal. Nick Carollo, part of the team here at Bloomberg News, who wrote it, municipal finance and schools reporter at Bloomberg. Let's get to world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. President Biden is at the National Institutes of Health to promote his efforts to lower drug costs. He's announcing that dozens of pharmaceutical companies will be required to pay rebates to Medicare because they raised drug prices faster than the rate of inflation. The White House says the rebate payments are expected to save seniors who take those drugs between $1 and nearly $2,800 per dose. Lawmakers did manage to pass the crucial defense authorization bill before they took their recess. We get details from Bloomberg's Nathan Hager.
It was a bipartisan vote, 310 to 118 in the House, to send this $886 billion legislation to President Biden's desk. The measure advances the trilateral security deal with Australia and the UK known as AUKUS. It takes aim at China with measures to boost Taiwan's military training and cybersecurity, and it includes $300 million in assistance to Ukraine, a fraction of what Kiev is looking for. The bill passed despite ultra-conservative opposition to the Pentagon's abortion travel policy and a controversial electronic surveillance program. In Washington, I'm Nathan Hager, Bloomberg Radio.
The Senate will remain in session next week as bipartisan talks on border policy and Ukraine aid continue. The Senate was scheduled to adjourn at the end of this week, but lawmakers have decided to stay in town to make progress on a deal before the end of the year. Well, some positive movement for Ukraine today. Fresh off a trip to the U.S., Ukrainian President Volodymyr Zelensky today gave a speech to a summit of European Union leaders as he seeks to open membership talks. It must have worked because the EU says it will open those talks after a unanimous vote. Hungary was pushing back on the idea, and Prime Minister Viktor Orban was not in the room for the final vote. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Down day, though, for the NASDAQ 100 index. The Dow trading at a record. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green in a choppy session. The Dow is currently up 113 points. S&P's gained 7, while the NASDAQ is up just 11. The U.S. 10 yield sinks to 3.93%. Gold is up 6. Oil is climbing. And Bitcoin is little changed. Among the main 11 S&P sectors, leaders were energy and real estate. Consumer staples and utilities were under pressure. And leaders to the upside in the Dow, Caterpillar and Goldman Sachs, while UNH and Procter & Gamble led to the downside. In the tech space, Intel says its accelerator outperforms NVIDIA's H100. And in deal news, Global Payments is said to weigh an acquisition of its U.S. peer, Shift4. In other news, Moderna CEO says their cancer vaccine could launch as early as 2025. And wrapping things up, Costco and Lennar report after the bell. Live from the first breaking news desk, on Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, here we go. As we just heard from Bill Maloney, choppy session, but we are broadly in the green, at least on the Dow Jones, up 0.3%. We just heard the numbers from Charlie, too. The S&P up more than 0.1%. The NASDAQ composite up 0.7% right now. Let's get to the drive to the close. We got with us Andrew Cry, the co-CIO of Crescent Grove Advisors. He's here with us in the Bloomberg Interactive Brokers studio. I want to start with fixed income with you, because what these moves that we are seeing when it comes to, especially, the 10-year, given that roughly a month ago we were at 5% on the 10-year, now we're, sub 4%. Wow.
It's extraordinary.
Did you see this coming?
I would say we...
Be honest.
Well, we had started to inch out on duration.
Okay.
Because you start to get to 5%, and clients we work with, in particular, tax-sensitive municipals, start to become very interesting on a taxable equivalent basis. If you can lock in longer duration, 7-8% taxable equivalent yields, right? That's really attractive, particularly from where we came from, going back to the 2010s, your interest rate policy, et cetera, right? So we'd started to inch out, but we weren't fully there, right? I mean, we weren't full up on duration, and I think this move has just been so dramatic. And now the bond math gets pretty interesting at this point, in the sense that your cash rate, 5.5, or 5.3, whatever you want to pick your number, money market fund type rate, relative to going in today, at least, a brand new dollar going to work at 3.9% in the 10-year, you're really expecting some additional price appreciation to make up that gap, or pretty significant rate cuts, which is perhaps where the market is headed at this point. in terms of thinking about Fed policy, the 6 cuts now being priced in 2024.
I mean, where do Treasury yields even go from here? It was interesting. I was talking to a number of colleagues, and we were looking at outlooks. And some outlooks said, by the end of 2024, we'll see the 10-year at 4%. And that move has already been done in just 24 hours. So what's next? What are we actually going to see in 2024?
Yeah, the poor folks that have to go back and rewrite all these outlooks at this point because of what's happened within the rates market, within equities now at price targets that people were talking about 12 months out. Again, extraordinary moves that we've seen now over the course of the last couple days, let alone the last sort of 6 to 8 week period. Look, I think we've probably come a little bit too far too fast. That's our view. Just if you look at 6 rate cuts for next year and sort of how that feeds into the 10-year pricing and the overall sort of soft landing thesis that people are really that's underpinning that move, we just tend to think that it's going to be a little bit choppier than that. And there's a great piece this morning from one of your colleagues, Cameron Christ, talking about the Fed cutting because they think they can, as opposed to because they have to in this environment. They feel like they've got scope to take down rates because they're seeing the soft landing play out. When they do that, I tend to think a more incrementalist approach is warranted, as opposed to being so dramatic. The flip side of what we saw, perhaps going into the rate hiking cycle, where they felt like they really had to catch up. They were behind the curve. So I don't think they feel like they're forced into a position where the economy is really deteriorating at this point. They're going to have to take big, chunky moves in an accelerated fashion. If that's the case, then why not play it out a little bit more slowly, a little bit more gradually? So we tend to think 6 is too many. Probably 3 that the Fed is talking about is more appropriate in terms of expectations.
So when you say that you think we've come too far too fast, are you referring specifically to rate cut expectations? Are you referring to what we see in the bond market right now? Are you referring to just this rally that we've seen over the last 7 weeks in the equity market?
I would say all the above.
Okay.
Yeah, just in terms of the move, the dramatic amount of sort of repricing that we've seen across the curve, really, but in particular the 10-year, if you want to point to that, as being, again, an extraordinary, keep coming back to that word, move that we've seen, the rate cut expectations that we're seeing next year, and then the repricing of equities sort of alongside that. That rubber band's being stretched pretty far at this point, we think, and ultimately, you come back, it's a supply and demand game. At some point, the incremental buyer just sort of peters out, right? We've seen such a rapid move off the lows 8 weeks ago, roughly speaking. We just think that probably a little bit of a breather is warranted in that scenario.
What about for stocks? Do you think the Fed put is back?
It certainly seems like they've tilted the balance towards being a little bit more accommodative going forward, or they're willing to step in, right, if they start to see a little bit of economic deterioration. Clearly, they're still keyed in on inflation, but they've changed the balance. They've changed the narrative at this point. I think as we look at stocks going into next year, really today it'd probably be a microcosm of what we would think about going into 2024, meaning a rotation out of some of the really big winners, the mega cap tech names, and into things that would sort of represent a catch-up trade, if you will. Small caps, more value, cyclically sensitive types of names across the market that have been left behind in this period where the Magnificent Seven were outperforming so dramatically. So again, we would look at, again, a day like today and just say, this is probably what we'd expect into 2024. Not to say the tech's going to be bad, but we just think the relative value trade is now on.
If one of your clients missed out on this rally, maybe they were hesitant to put money in because they said, wait a second, I'm getting a little nervous that inflation's going to be sticky. And suddenly there's this rip your face off rally over the last 7-8 weeks. What's the opportunity left for them?
Well, here's what I would say first and foremost is that the opportunity cost of that is not what it was back in the 2010s, meaning if you're in cash, if you're in short-term fixed income instruments, you're still, earning 5 to 6% if you, went out into a little bit of credit, let's say, or short duration, maybe you're even 6
even
to
money
7.
Market funds over 5% right now. Right.
So I think that for us gives us a little bit of comfort, and you feel like, again, the opportunity cost wasn't what it was in the past. So that's one thing. At this point going forward, if you miss this, we wouldn't necessarily chase it based on everything we've kind of talked about thus far. I don't think we'd be inclined to really jump in. Maybe you start to nibble at some of the things that I talked about that offer more of a relative value story, small caps, non-US.
But then when could you see opportunity to get back in?
Well, so I think in terms of larger cap stocks, that's where we'd be a little bit more cautious. We think going into the beginning of next year, at some point there's going to have to be a little bit of a recalibration. Again, just go back to pure supply-demand dynamics. You're going to exhaust the demand side of the equation in terms of who's the incremental buyer at some point. We think whether it's 5%, 10%, whatever that sort of corrective reset phase looks like, is going to offer the opportunity then to get a little bit more bullish, into the balance of 2024.
You said today's action was a microcosm of what's going to happen. So we're seeing small caps rally, but we just have a minute left. We're also seeing some speculative tech rally. Cathie Wood's ARK Innovation ETF, some of the most shorted stocks in the market, up 6%. Are we going to see that kind of animal spirits continue as well?
I think you could see, broadly speaking, if the soft landing narrative continues to play out, that bodes really well for risk assets. And I think that could bring people back to the table with some of those more speculative names. Some of the things, again, that have been left behind now over the last 12 to 18 months were beat up so badly as rates were moving to the upside. I think this exuberance, as rates potentially start to move to the downside, could kick back in. I think it's definitely something you could see going forward. Mm-hmm. The other thing would be, if you look even at like private markets, companies that are waiting to IPO, if the IPO window opens, rounds that
that's the other big question.
Waiting to be priced, right, because of risk appetite.
Andrew Cry, co-CIO at Crescent Grove Advisors here in the Bloomberg Interactive Brokers studios.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Billionaire activist investor Nelson Peltz has nominated 2 directors to the board of the Walt Disney Company, including the media and entertainment giants. Former chief financial officer, Disney shares, they're up now by 1.1%. Peltz's Trian Fund Management has put forward Jay Rasulo, who is Disney's CFO between 2010 and 2015, and Peltz himself as candidates. Again, the Walt Disney Company up by about 1.1%. We are keeping an eye on shares of Moderna. They are trading higher after the drug maker announced its skin cancer vaccine cuts the risk of recurrence after 3 years in half when taken with Merck's cancer drug Keytruda. We discussed the findings with Moderna CEO Stéphane Bancel.
In 24, we're launching RSV, which is a big opportunity. If you look at what Pfizer and GSK reported in Q3, the RSV market is around 2x what analysts expected. So it's great for us because we believe we're coming with the best product on the market. We have more launches in 25, flu plus COVID combined, and then cancer as early as 25. So we're basically going into sales growth, and the pipeline is really exciting.
And Bancel notes that melanoma accounts for only about 1% of skin cancers in the U.S., but also causes most of the deaths from the disease. Moderna shares, they're up now by 9.5%. And those are some of the top company stories that we are following for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovec and Emily Grafeo in for Carol Masser this afternoon. Emily, we talked about the bull, okay? But here's a really fun story that I guess maybe I shouldn't say it's fun, but sometimes lawsuits are pretty fun. This is all about JP Morgan taking Barney Greengrass to court. So we're not talking about the legendary Upper West Side smoked fish purveyor and brunch destination, but rather its founder's grandson and namesake, a former senior financial advisor at the bank. So this is a story by Greg Farrell on the Bloomberg Terminal. In a Wednesday court filing, JP Morgan demanded $488,000 that it claims Greengrass borrowed when he joined the bank as a private client vice president back in 2010, but never repaid after he resigned 7 years later. We should note a lot of people are familiar with the name because it's the name of a very famous deli on the Upper West Side
A
of New York.
smoked fish purveyor. That is how Bloomberg's Greg Farrell described this story. But yeah, I mean, lawsuits are always fun. And Greengrass is the grandson, namesake of famous New York deli Barney Greengrass.
Exactly.
We'll note that.
JP Morgan, we should note, declined to comment on the case, but it's this latest twist in a long-running dispute between the bank and Greengrass, who initiated a FINRA arbitration back in 2018, accusing JP Morgan of shortchanging him on commissions. Now a managing director at Aegis Capital, Greengrass was defiant on Thursday. Here's what he said, quote, "It's a big bank going after the little guy. They stole my accounts for their benefit. They prevented me from being able to repay my obligations, which I had every intent of doing." Once again, we should note JP Morgan declined to comment on the case. Hey, we do have just a couple of minutes till we join our TV team here at Bloomberg, Scarlett and Romaine, taking a look at the major indices on this Thursday afternoon of what I think it's fair to call a historic week, even though it's not over yet because of that Fed pivot that we saw from Jay Powell and co. yesterday. The Dow seen some buying into the end of the day, into the close here, up more than 0.3%. The S&P 500 higher by close to 0.2%. The NASDAQ higher by 0.1% right now. Emily, that brings the year-to-date total for the S&P 500 up to close to 23%. And yeah, it's pretty incredible. And the NASDAQ up to close to 41%. It's pretty remarkable stuff. Hey, don't go anywhere because coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, YouTube, and on Bloomberg Quick Take. We're going to count you down to the close. Bloomberg's Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our friends Tim Stenovic and Emily Grafale. Welcome to our audiences across our Bloomberg platforms, radio, television, as well as our partnership with YouTube here. An extension of the rally here, Tim, in the equity space, but that is tilted pretty heavily to the small, mid-caps, and cyclical stocks, which I think would be kind of welcome for a lot of investors.
Yeah, it's kind of the tone from our markets guest this afternoon is that this broadening out of the rally that we're seeing, sort of moving away from the, quote-unquote Magnificent Seven. We're finally starting to see some breadth here. We're finally starting to see those folks who've been kind of left behind in this massive rally, at least in the tech names and in the indices. And that's good news for stock investors, and also stock pickers like to tell us it's good news for stock pickers, Emily, because they're the ones who, in this environment, they say, can find those ones that continue to move higher.
I'm thinking of one stock picker who's having a good day, Kathy Wood. You look at the ARK Innovation ETF, up 3.8%. That speculative tech trade still rallying, even though we see these indexes starting to come off from the fervor that we saw yesterday. Scarlett.
Yeah, I'm just looking through the different asset classes to see what's not participating in this gain. The dollar, for one, the dollar is weaker versus all the G10 and the major currencies, but across the commodity complex, it's all green arrows all around.
Yeah, definitely so here. As the rates drop, and of course the drop in dollar sort of fuels all this, and you look at sort of the resurgence in a lot of those interest rate sensitive sectors. You have, of course, you have the traditional ones like REITs, but you look at the bid coming into meme stocks. You look at the bid coming into a lot of those energy stocks, which are, of course, also tied to that, as well as in the real estate space as well, which I think I just said. Anyway, let's walk you through the closing bells here on this Thursday afternoon. A Dow Jones Industrial Average pushing to another record high, up about 160 points, or 0.4% here on the day. Modest gains for the S&P 500, just about 0.3%, but now right around that 4720 level, and now just about 70 points or so away from a fresh all-time high. The NASDAQ Composite higher on the day by about 0.2%. We should point out the NASDAQ 100 at one point did trade at a record high, though that's going to finish in the red on the day, down by about 0.1%. And let's take a look at the Russell 2000, because that was the outperformer here on the day, a 53-point gain on the day, 2.7%. And you just add up the differential with the broader market here, and you're talking about one of the biggest outperformances that index has had versus the broader market all year long.
Yeah, the Russell 2000 certainly the star of the day. If we peel back the layers of the S&P 500 and take a look at what moved higher, what moved lower, Scarlett, we had 328 stocks advance in the S&P 500. We had 174 move lower, kind of equally split on the Dow. 16 moved higher, 14 moved lower, Scarlett.
Yeah, on the New York Stock Exchange, more than 3 stocks gaining for every one that declined. Let's take a look at the different sector performances here. You've got autos in the lead, gaining more than 5%, and believe it or not, Tesla is the smallest gainer in that group. Within the banks, all 15 members rose, and energy stocks getting a big lift with oil prices rising as well. The decliners of note are insurance companies, off by more than 3%, household and personal products, and software and services led by Adobe.
Well, let's take a look at some of the gainers. No shortage of companies to find a highlight here. Let's start with shares of Moderna, among the best performers on a points basis, or percentage basis, I should say, in the S&P 500 day. Finished the day up more than 9%. Shares soared after a new study showed that a personalized vaccine that was developed by Moderna and Merck actually helped prevent a resurgence of severe skin cancer for 3 years. Some details of the study include that patients with severe melanomas who got the vaccine and Merck's cancer drug Keytruda were 49% less likely to die or have their cancer return than those who got Keytruda alone, the company said on Thursday. So some great news when it comes to advancements there. And also some really good news for Moderna, whose shares have been under pressure this year in the wake of less than ideal uptake for the company when it comes to new COVID vaccines. I want to go to Rivian. Scarlett, you talked about shares of auto companies being higher today. Look at Rivian, up close to 14%. We learned today of a pilot deal with AT&T for an order of commercial van R1 vehicles. Have you guys seen the Amazon Rivian vans making deliveries around New York City?
Yes, you can't miss them.
Yeah, they're all over Brooklyn, and because I'm really interested in these cars and what they do, I always ask the drivers what they think of them. I've gotten like universal, unanimous feedback that they love them, and they're actually kind of fun looking too, and they're very quiet.
You can't miss them.
Well.
That's the thing.
Yeah, they got like the big smiley faces on the back, which they kind of look like people. It's kind of funny. Clean energy stocks too, also surging on the day today. Let's take a look at the iShares Global Clean Energy ETF. It's ticker ICLN, finished the day up close to 5%. This follows the performance of the S&P 500 Global Clean Energy Index. you got companies in here like First Solar finishing the day up more than 8%, Enphase Energy up more than 12%, SolarEdge Technologies up around 17%. Interest rate sensitive stocks, clean energy stocks are, and investors are certainly happy that the Fed seemed to indicate yesterday that they were at or near their peak when it came to those interest rates, Emily.
Well, like Scarlett said, Adobe is leading a lot of the market lower today. We have those shares down the worst intraday decline since February, down 6.4%. They give a full year forecast that was weaker than expected on a number of key metrics. And they also disclosed that the US FTC has been investigating the company's subscription cancellation practices for more than a year. The FTC really wants to make it as easy as buying a subscription to anything, a membership, an online cable subscription, as easy as it is to buy as it is to cancel. So Adobe, I guess, coming under some pressure there. I'm also looking at Cardinal Health, those shares falling as much as 6.9%. Wells Fargo began coverage of the drug distributor, and they gave it an underweight rating. We also saw Piers McKesson falling because in this coverage note, Wells Fargo said that it's really hard to argue for near-term upside for the sector while these kinds of stocks have had an amazing run. Earnings growth is likely to moderate over the next few quarters, and Wells Fargo is more cautious on the sustainability of some of these tailwinds. I wonder if he wrote that note before or after the Fed meeting. I'd be curious because there's a lot of tailwinds in the market, at least right now for some stocks. And also Global Payments was down as well, as much as 7%. This is a fintech company that is weighing an acquisition of Shift4 Payments, Inc., according to people with knowledge of the matter. Atlanta-based Global Payments has been working with an advisor to study the feasibility of this deal. This is all according to people who asked to not be identified discussing confidential information. So Global Payments down, but Shift4 was in the green today. Scarlett.
Yeah, interesting moves that we've been seeing in some of those individual names. And we take a look at what's going on in the yield space. That 30 basis point drop that we saw in the 2-year yield yesterday, extending just a bit on the day, down by about 5 basis points here. And of course, nowhere near what we saw yesterday. But you see the trend line that is down 4.4 right now on your 2-year yield. And you take a look at your 10-year yield. We're now down below 4% for the first time going back to July. And quite frankly, at 3.9 and change. And at one point on the day, we actually traded below that as well. Your 5-year also below the 4% mark, and the 20-year and 30-year drifting down to that level as well, as everyone now is not only pricing in rate cuts, but really just pricing in a whole shift in the rate regime. And you're seeing that yield curve shift all the way to the downside, and it raises a lot of questions as to what, I guess, the next catalyst is going to be. I mean, this is it. We get a little bit more economic data. Last time I checked, there's no more earnings, or at least I hope not. And the Fed is pretty much out of the picture until their next meeting at the end of January.
Well, yeah, but at the same time, it's going to take a while for people to shift their portfolios to get money off of the sidelines. And it's notable that the Bank of England and the ECB did not follow the Fed in pivoting. So it feels like the U.S. is the only game in town when it comes to the different assets denominated in dollars. I think one of the next catalysts could be before, and we're not too far from hearing from the banks in early January. Remember, it is always earnings season. But what about this close to $6 trillion that's just sitting there in money market funds? If we indeed start to see the yield on those money market funds move lower as a result of these lower interest rates, where does that money go? Does it go into the bond market or does it go into the equity market? And if it goes into the equity market at these levels, what actual effect does it have on the equity market? Where exactly does it go? That's what I'm watching.
Yeah, and I mean, Tim, there's a lot of people, a lot of guests on this show who are talking about how they wanted to extend duration, and they kind of missed the boat if they were trying to do that, trying to lock in those higher treasury yields. They've already come down so much in the last 24 hours. I imagine if we do see a pickup in yields, we're likely to see any of those bond bulls just kind of get right into the market, hoping to not miss out on any more.
Yeah, but it raises the question, too, does it have to go into equities? I mean, you talk to the private equity and private capital guys, I should say, and they all think it's all going to flow to them. And, of course, even folks in fixed income say, well, it's all just going to stay in the bond market. It'll just move from the shortest to short term to longest. So everybody has this wishful thinking here. But what is the case for equities? I mean, I know some of the rally that we've had today is directly tied to that drop in rates, but, I mean, there has to still be some fundamental story. Is that there?
It was a question that I posed to really our guests throughout the last 24 hours because there is so much money there. But Andrew Cry.
How many guests do you have in an hour?
We have 3 guests per hour. Okay. How many guests do you have per hour?
6?
Yeah, 6, 7.
6 or 7.
Yeah, we go
We beat you.
We go long with our interviews. Andrew Cry, the co-chief investment officer over at Crescent Grove Advisors, Scarlett, he said that with the broadening out, there is still room when it comes to individual stocks. He was again a stock picker, so he's interested in talking his book a little bit here. But I think we're going to be hearing a lot of that with the broadening out of the rally. Like, okay, hey, we know the stocks that are going to move higher. The easy money is gone with the indices moving higher, the Magnificent Seven moving higher, having such a good year. We know the stocks that are going to be moving higher moving forward.
Yeah, all those beaten up names,
Yeah.
all those names in the small cap space, all those that have a lot of debt but have held on so far, they look a little bit differently now.
They certainly do. Hey, we got to go. But don't worry, because we're going to be back with you in less than 24 hours for our next simulcast. That does it for this one, though. Beyond the Bell.
Do you just stay there, or do you leave?
I sleep here, actually. Yeah, which is fine. We got everything here.
There's a carpet.
Yeah,
there's food upstairs.
That's actually all I need. That is going to do it for our cross-platform coverage of the market close here on Bloomberg TV and radio, Bloomberg Originals, and YouTube. Catch us tomorrow, same time, same place. Consult poll. This disconnect illustrates one of the core challenges of Biden's campaign for a second term. He struggles to get credit from voters for policies intended to motivate them. Gregory Cordy is White House and politics reporter for Bloomberg News. He joins us from our Washington, D.C. bureau. Check out his story. It's on the Bloomberg terminal and, of course, at Bloomberg.com as well. Biden forgave billions in student debt, but the polls show that it's not enough for Gen Z. Gregory, good to have you with us once again on another exclusive Bloomberg News Morning Consult poll. Give us the big takeaway here. What were some surprises that you found in the polling?
Yeah, well, so this is the third poll that we've done of the 7 swing states that we think are going to matter the most in the presidential election next year. And what we saw overall, and because people are going to focus on the horse race numbers, so let's get those out of the way, we saw is former President Trump leading in all 7 of those states. Now, 5 of those are within the margin of error. Only Georgia and North Carolina can we say that Trump is statistically leading Biden at this point. But still, that's a pretty significant move. And we've seen this month over month, Trump creeping up in those numbers. We're still 11 months out or so. There's still a lot that can change. Remember, these are always a snapshot in time. But Trump seems to be in a very good position. But the other thing that we wanted to do with this poll is, as you pointed out, we're trying to understand what's moving the electorate. And one thing we saw last month is Generation Z voters moving away from Joe Biden. We wanted to understand that a little bit more, so we asked specifically about student loans, which of course benefit a number of generations, but the idea here is that Biden really is trying to reach young people with this, and young people aren't very impressed. 43% said that, which is a priority, said that President Biden should be doing more on student loans, but also there's just sort of a messaging failure here that what he has done, really younger voters say they haven't heard much about. And so he's really struggling to have his policies, which he thinks benefits some of these constituencies, transfer into support in the polls.
So, Gregory, I mean, did you get a sense of why else, beyond the messaging, it just wasn't getting through to Gen Z? That the debt, it seems like Biden is trying to appeal, but the message is just simply not getting through.
Yeah, this is a complaint that Democrats always have, is that they feel like, boy, our policies would be really popular if people just knew about them. And look, President Biden is arguably, and I think we can say this from just a historical fact, that he's arguably one of the most successful legislative presidents of the last 50, 60 years. You'd have to go back to Lyndon Johnson to see the sweep of legislation passed under a president. And yet, if you poll on the Inflation Reduction Act or the Infrastructure Bill or the Chips and Science Act or any of the other bills that President Biden has signed into law, you really don't get a whole lot of salience out there. People just aren't aware of them. And that's one of the big challenges for President Biden, also on his executive actions. The student loan actions, You remember, he tried to cancel a lot more in student loans. The Supreme Court told him he could not. He's had to pare that back a little bit with a more modest range of actions. And that might be also what some of these voters are reacting to, is that they're just not impressed with the scope of the student loan relief.
Yeah, it's pretty remarkable given where we are with the economy and given what we know that the Biden administration has done and has attempted to do. So I do wonder if it all does come down to messaging, as you mentioned, Gregory. I'm also wondering, given that we're unemployment's at 3.7%, we've got the stock market back close to record highs at this point. Inflation is coming down. What are the conversations that are happening on President Biden at the White House for President Biden and for his reelection team at campaign headquarters about how to change this messaging and really express the successes of the Biden administration as they see them to these voters in swing states, so they do have a chance at winning reelection?
They understand absolutely that is the challenge in front of them, and they have the work cut out for them. The perceptions of the economy are lagging. And one thing that we're watching very closely there is that when we ask these swing state voters what they think about the national economy, 3/4 of them say it's bad. They say it's heading in the national economy is heading in the wrong direction. But when we ask them about their local economy, about their state economy, about half say that it's good. And so there's a disconnect there. The economy that people are experiencing in their everyday lives, they say is not so bad. It's the national economy that they're worried about. And of course, inflation is a national issue. Federal spending is a national issue. That might be what they're responding to. But the other thing that President Biden needs to do is to begin to make the contrast. And we're already seeing him do that. You'll hear him say very often, don't compare me to the almighty, compare me to the alternative. And of course, the alternative at this point is former President Donald Trump. And so the job of the president is to remind people where we were in the pandemic 4 years ago, to remind people why they voted against Trump in the first place, and hope that some of those voters who are lukewarm on the current president will come back to the Democratic fold.
Gregory, what if there's a chance that there's another alternative that's not just Trump or Biden? Because I'm looking at this poll, and one of the takeaways was younger generations and black voters were more likely than the average swing voter to consider voting for an entirely new political party. What do you make of those results?
Yeah, one of the things that we've been seeing in younger voters especially is that they are perceived to be more liberal and more democratic, but these younger millennials and these Generation Z voters don't really see party loyalty as a priority at all. They see causes and issues as most important. So they're interested in guns, they're interested in climate change, they're interested in the student loan issue that we've talked about, they're interested in the economy and jobs and good wages for them, for their careers going forward. But they don't necessarily think that any one party has a monopoly on those issues, and they're looking for alternatives.
That's interesting.
And they're looking for third parties or independent candidates, and that's exactly what we're seeing in this poll.
Are based on your reporting, and I mean, I know the polling didn't cover this, but I know you have looked into third-party candidates in the past. Who are the third-party candidates that you think could pull from President Biden or pull from President Trump?
Well, we did look at Robert F. Kennedy Jr. He is the biggest name independent candidate or trying to get on the ballot in all 50 states. He'll probably fall short of that. It's one challenge that these third-party candidates have is that it's a Herculean task to gather the signatures and pay the filing fees and do everything you have to do to get on the ballot in all 50 states. But Robert F. Kennedy Jr. probably will come close to that, and he's polling at 9% in our poll. It's interesting because Republican voters really like him. He's a vaccine skeptic. He has some unconventional views for a Democrat. So Republicans really like it, but those Republicans are also very loyal to Donald Trump. Whereas Democrats aren't as, even though Kennedy is obviously a very big Democratic name in U.S. politics, Democrats are a little more skeptical of them, but also they're also not quite sure about Biden. And so what we're seeing right now is it's kind of a wash. But as we talk about Cornel West and Jill Stein, two independent candidates on the left side of the spectrum, and now we're looking at a potential no labels candidate, maybe a Joe Manchin or a Larry Hogan or somebody. That might take more. The fear is that will give more liberal Republicans who would vote with Biden on the democracy issue another option. So, there's a lot of variables that we have yet to sort out in the third-party space.
Yeah, it's going to be an interesting year for you and all your colleagues. Gregory Cordy, White House and politics reporter for Bloomberg News.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Costco's numbers are out. Costco reporting first quarter total revenue of $57.80 billion. Estimates were for $57.71 billion. After hours, Costco shares are trading lower now, down by about 1.5%. First quarter EPS came in at $3.58. Estimates were for $3.41. Costco did announce a special cash dividend of $15 a share. It was an update day for the Dow, the S&P, and NASDAQ. A down day for the NASDAQ 100 index. Stocks rallied again today with the S&P in a choppy session, up 12 points, up by about 0.3%. The Dow, another record, up 158, up 0.4%. NASDAQ up 27, down there, down day, an up day of 0.2% on NASDAQ. It was the NASDAQ 100 index that was down after earlier gains. The NASDAQ 100 was down 24 points today, a drop there of 0.1%. 10-year yield 3.91% with a 2-year 4.37%. Gold up $8.50 the ounce to $2,036, up by 0.4%. The International Energy Agency is slashing estimates for this quarter as global oil demand growth slows down sharply. The IEA sliced nearly 400,000 barrels a day from assessments of consumption growth for the final 3 months of this year. Today, we did see shares of oil companies advancing today. We had shares of ExxonMobil up by 2.7%, BP up 2.2%, Chevron up 3.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Okay, Emily, you've had some time to think about this, okay? Don't look at the notes. Pop quiz. Where do you think the majority of U.S. electricity comes from?
Fossil fuels.
Ah, ding, ding, ding. You're right. Okay, you win. So about 60.4% comes from fossil fuels. So natural gas, coal, petroleum. You said solar before, that it wasn't. You were right about that. 21% comes from renewables. So wind, solar, hydropower. So here we are at more than 80%. The rest, well, that comes from nuclear energy, which has remained stagnant over the last decade at about 19%. This, by the way, is all according to the U.S. Energy Information Administration. But our next guests, along with many others, argue that in order to reach net zero goals, governments have to go nuclear. Maria Korsnick is CEO of the Nuclear Energy Institute. It's a nuclear industry trade association that advocates for more nuclear power generation. She joins us on Zoom from Washington, D.C. Maria, how are you?
I'm doing great, thanks. Good to hear you.
Good to talk to you, and you're in luck because both Emily and I love talking on nuclear energy here. Why do you think, gosh, I want to go in so many different directions, but I want to talk to you about the challenges of nuclear energy. When people say they know it's going to take nuclear energy for us to get to net zero, they also say, well, we also know that it takes so long and it's so expensive to build nuclear power plants here in the U.S. What would you say to that?
I'd say you have to look at the value of nuclear, quite frankly, right? It's that 724 around the clock. Not only is it carbon free, it's highly reliable. And I think we don't talk as much about the value that you're getting. These power plants are built not for 40 years, not for 60 years, 80 years, 100 years. And so you really have to look at the complete picture that you get when you build nuclear. Yes, they're large projects. Yes, they're going to cost in order to make that happen. But the value that they bring to the system is really incredible. And again, I think we just need to shift a little bit more to the value conversation.
So you were at COP28. Can you give us a sense of the narrative around nuclear energy? Was the consensus that this is green energy? Like, how were people actually talking about this form of energy?
Absolutely. In fact, some are coining this the nuclear COP. And I've been to the last few COPs, and I would just describe nuclear as a little bit trying to get a seat at the table, trying to create some conversation. This COP, we're in the sort of official documents from COP. We're in what's called the stock take, paragraphs about nuclear, about wind and solar together being what's required. The fact is that, nuclear was never officially credited and mentioned in the way that it is here. Tripling nuclear was a pledge that was signed by 24 plus countries. The IAEA had a pledge on just crediting nuclear for being part of the decarbonizing solution. Over 40 countries signed that. So I would really say this COP was sort of a real recognition of the value that nuclear is going to bring. And quite frankly, we're not going to get anywhere close to the commitments if we don't include nuclear in the solution. We have to be there.
I think people are still scared of nuclear. I have to tell you, I grew up, and people who've heard me talk about this before, apologies, but I grew up near a nuclear power plant in California. It's actually the last online nuclear power plant right now, Diablo Canyon in San Luis Obispo County. We would have siren drills once a year. I think it was the first weekend in September at noon when, the sirens would go off to warn people like, okay, this is what would happen if there were some sort of nuclear meltdown. People had iodine pills at their disposal. Is that, and they grew up, thinking about Chernobyl, 3 Mile Island. What's the safety around this stuff for people who say, wait a second, I'm a little scared of nuclear?
Yeah, honestly, it's incredibly safe. And, I'll say, grew up around nuclear. I've operated plants. I've been a nuclear plant operator. I've been a site vice president in charge of one plant. I've been a chief nuclear officer in charge of 5 reactors at 3 locations. And I just say I know nuclear from the inside, and I would live next to a nuclear plant any day. They're incredibly safe, and especially as compared to other technologies that we need. And I would also say that, nuclear uses the fewest critical minerals. Nuclear uses the lowest land space, if you will, for the volume of energy that it produces. From a life cycle perspective, it is in the lowest use of carbon for the whole life cycle of the plant. It's clean energy, and in terms of carbon-free and in terms of other emissions and jobs. You get a lot of jobs with nuclear.
Yeah.
They're little economic engines for the local community.
I think to a lot of people, it's almost perfect. But I think a lot of people would also say, what about the waste? We still haven't figured out what to do with nuclear waste.
Yeah, I look at that a little differently. I'm so proud of nuclear for being able to account for all of its waste. Oftentimes we look at nuclear and say, what are you going to do? And I said, well, you know what? We know where every piece of it is. From all of the waste or all of the nuclear power that we've used since the 1960s, we know where every piece of that is. And you're absolutely right. Some of the fuel that we have today, which we call waste, I would prefer to say it's used fuel. And why do I say that? Because it can be used again in other types of reactors. And those other types of reactors are ones that we are trying to bring to the marketplace literally as we speak. And so I would say the used fuel you have today is a future resource, and we should look at it like that.
What's next for nuclear in the U.S.? Are we trying to build more reactors actively in this country?
So we're building some down in Georgia right now. One went online this year, and the second will go online next year. And what we're in the process of doing right now, if you could imagine an innovation pipeline, chock-a-block full of different designs, and that is coming out over the next 5, 10, 15 years. And these are partnerships between our national labs and private companies, and very much one beautiful, quite frankly, innovation here in the United States. And I'll tell you, nuclear is not just being talked about in the United States. It's being talked about around the world. We just talked about COP, but many other countries right now are looking to expand nuclear, and they're looking at the United States to help them. So what we need to be doing here in the United States is bringing some of these innovations and getting them built so that these other countries can have a chance to see them and then choose which design they want built in their country. At COP, Poland, for example, said, we already have 6 sites. At each site, we want 4 small modular reactors. We're teaming with a U.S. company. We want to put 24 in place.
Maria, I have to ask, what do you make of the price of uranium? It's up 75% this year. I write about ETFs and commodities markets, and there's a lot of interest for buying into this nuclear energy uranium trade. But why is it up so much, 75% this year?
Well, a couple of things. For one thing, I think that's an indication that people are bullish, if you will, as they look ahead for nuclear. And I think also we're looking very much at ensuring that we have a solid and stable fuel supply as we move forward. You've seen that we want to invest in the U.S. fuel supply here so that we have not only the mining, but also conversion and enrichment services available to this industry so that we have a solid supply as we move forward. And so I think a lot of that has put attention on the front end of this fuel supply, and I think that's causing some of that price increase.
Well, it's really interesting stuff. As I mentioned, Emily and I both love talking nuclear, so we really appreciate you taking the time and joining us this afternoon. Maria Korsnick, CEO of the Nuclear Energy Institute. It is a nuclear industry trade association that advocates for more nuclear power generation. She joined us on Zoom from Washington, D.C. The issue is just the timetable for these, Emily. I just wonder, politicians don't necessarily have long-term horizons when it comes to their decision-making because of re-election campaigns, and it's so hard to do these big infrastructure projects.
Yep.
So I just wonder, what the appetite is for building more nuclear power in the U.S.
And like you said, there's so many people that are so excited about this, and then there's still some people that just can't shake that idea of Chernobyl.
Yeah. In any case, let's stay in Washington, D.C. and get check on the latest world and national news. We got Nancy Lyons in the 99.1 newsroom there. Hey, Nance.
Thanks, Tim. The Senate is pushing off the start of its recess a little while longer in hopes of reaching a compromise on aid to Ukraine and security at the U.S. border. Senate Majority Leader Chuck Schumer.
This might be one of the most difficult things we have ever had to work through, but we all know that so much hangs on our success. We know the world is watching. We know autocrats like Putin and Xi are hoping for us to fail. So we need to try with everything we have to get the job done.
Schumer says he's hoping for a vote sometime next week. White House National Security Advisor Jake Sullivan is in Israel, conferring with leaders there about the ongoing war on Hamas. National Security Council spokesman John Kirby on Sullivan's discussions.
He did talk about possible transitioning from what we would call high-intensity operations, which is what we're seeing them do now, to lower-intensity operations sometime, in the near future. But I don't want to put a timestamp on it. I think you can understand that the last thing we'd want to do is telegraph to Hamas what they're likely to face in coming weeks and months.
National Security Council spokesman John Kirby. More signs of trouble for the Biden campaign in the latest Bloomberg News Morning Consult poll. It shows the president now trailing former President Donald Trump in all 7 of the swing states that we're tracking this cycle. Bloomberg Washington correspondent Anne-Marie Hordern.
Biden is losing support from these groups that he has to win. We're talking about Black Americans, young Americans, and women voters. So what you're going to see, though, is potentially, the fact that Biden could build on this. It's about bringing back in the people who voted for him in 2020. So it does look very good for the former president.
Bloomberg's Anne-Marie Hordern. Global news 24 hours a day, whenever you want it, with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. Costco shares higher after earnings. Costco reported EPS for the first quarter that beat the average analyst estimate. After ours, Costco shares, they are now up by 0.7%. Also reporting after the close of trading, we heard from homebuilder Lennar, and it forecasts new orders for the first quarter that beat the average analyst estimate. Lennar, though, after ours, trading down by just about 2%. An update for the Dow, the S&P, and NASDAQ. A down day for the NASDAQ 100 index. Today, the S&P was up another 12 points. That was a gain of 0.3%. Dow Industrials up 158, up 0.4, while NASDAQ advanced 27 points today, up by 0.2%. The NASDAQ 100 index fell 24, down 0.1%. Another big day for the Russell 2000 index of small cap shares, with the Russell 2000 advancing 2.7%. 10-year yield 3.91%. The 2-year today 4.37%. Gold up $8 the ounce, up 0.4%. And West Texas Intermediate crude oil up 3.1%, 71.61 now for a barrel of West Texas Intermediate crude. So an up day, the day after the Fed decision and Jay Powell's remarks. Andrew Cry is co-chief investment officer at Crescent Grove Advisors, and he was a guest right here on Bloomberg Business Week.
I think as we look at stocks going into next year, really today it'd probably be a microcosm of what we would think about going into 2024, meaning a rotation out of some of the really big winners, the mega cap tech names, and into things that would sort of represent a catch-up trade, if you will. Small caps, more value, cyclically sensitive types of names across the market that have been left behind in this period where the Magnificent Seven were outperforming so dramatically.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Download it wherever you get your podcasts. Recapping stocks higher, 12-point gain today for the S&P 500 index, closing at 47.19. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it's Thursday, which means dropping tonight is the latest episode of the Business Week show. It's the world's first late-night TV talk show. It's about pop business, money, power, and culture. Bloomberg Business Week contributor Max Abelson goes deep with his guests about the profound and complicated themes that make business and life so interesting. Each week there's a theme. Past themes have been genius, risk, moonshots, ambition, and reputation. This week, Max and the team are focused on the theme of second acts. And tonight, Max sits down with former New Jersey governor and ex-Goldman Sachs chief Jon Corzine, as well as international DJ Steve Aoki, to discuss the different acts that have made up their lives and careers. Quite a pairing. Now, you didn't sit down with them together.
No, but I still think I might be the only journalist in the history of this country who has interviewed Steve Aoki and Jon Corzine on the same week.
Well, how did this, the second acts, I love the pairing here.
Thank you.
But how did these two come together when you talk second acts?
Well, if you think about Jon Corzine's career, which has had immense success, I think it's fair to say that you would look at it through the prism of, catastrophe, that the failure at MF Global is going to be one of the things this guy is going to be remembered for. And when you look at Steve Aoki, you see a guy who went from being basically an indie, crunchy, vegan, hardcore punk, to, having his music streamed 1 billion times and throwing cakes and spraying champagne and being sort of like a fun, party DJ. And I really like the idea of figuring out what unites someone who basically goes from one win to another with someone whose whole career has been up and down and up and down. And I feel like both are really worth understanding.
Did you notice a unifying characteristic or personality traits that these two people had that enabled them to make a second act in their life?
Well, look, I can't lie to you. They are different people. I mean, I can't imagine Jon Corzine spraying champagne or throwing cakes. Although, you know what? Human nature, in the end, is so similar.
Could you imagine Steve Aoki as the governor of New Jersey?
I really couldn't.
Okay.
I really could not. But, there's David Solomon, who's running Goldman and who is a DJ. But, I think that it doesn't matter if you're a wealthy Wall Street executive or if you're a unst DJ, that like the struggle to be yourself, be true to who you are, and through being true to who you are, being successful, and then the struggle to recreate yourself authentically is like a universally challenging thing.
Hey, we have a clip from the Business Week show, tonight's episode, and I love this clip, Max, because you go somewhere that I want to go with every guest. You just go and you ask it. Check out a clip from tonight's The Business Week show with Steve Aoki and John Corzine.
Around 2004, you start DJing in LA.
Yeah.
You were so, I think, unconcerned with the business side at the time that I think essentially you were like losing money on some of the gigs in the early days.
Yeah.
But by 2012, I think you were said to be the highest grossing electronic music artist in North America. Can you take me to now? Like, just speaking generally, I mean, we're a business show. Like, how much do you make per show these days? Like, give us a sense of what things are like.
Okay, so it's like varied. You know, like in some instances, I do make, you know, in the hundreds of thousands of dollars. But it's once again economy to scale. It has to make sense to the person that's giving you the money. They're not just be like, oh, I'm gonna lose 60 grand, but I really need Steve Aoki to play. Steve Aoki needs to draw this amount of money so that Steve Aoki's worth the 150 grand or 200 grand or 100 grand, whatever it is, or 50 grand, whatever it might be.
Yep.
And then I could still make money on top of that.
Because people are coming to see you.
Yeah.
That's Max Abelson and Steve Aoki. Catch the Business Week show tonight at 10:30 p.m. Wall Street time on Bloomberg Television. So what was your takeaway? My takeaway is like, okay, a couple $100,000 to show up and be Steve Aoki for a night and DJ. That's my takeaway.
My takeaway watching that was that when you see someone talking in the third person in an interview, it's either a sign that things are going really, really badly or really, really well. And I thought it was cool that he answered the question. You know what, listeners? He went on to say that sometimes he makes like 100, 200, 300, 400, 500. He said $600,000 sometimes
for one appearance.
For one appearance, but you know what? He defended himself in a kind of capitalistic market way. He was like, you know, I headline like really big festivals and my name is at the top and like people want to come see me and like they're not doing it to be nice to me. They're doing it because I make this amount of money. And you know, a Goldman Sachs CEO might say the same thing. These are people they're not making $600,000 per pop. I mean, I don't know how it boils down to per day, but these are people who can make tens of millions of dollars per year, which, you know, you can knock and you can complain about certainly, but their defense will be the same, that it's like under capitalism, there's supply and demand, and these people, that's another thing that unites them, that they think that what they're selling, people are buying.
Well, what about John? What was the most interesting takeaway from that interview?
Well, John Corzine is the subject of a lot of things, including in some corners, I think not just criticism, but ridicule. I think there are people on Wall Street who are still furious and livid about his management of MF Global. In fact, it's not that I think that. I know that. Mm-hmm. That Bloomberg did reporting on critics who basically, I think, essentially went to the CFTC in the past year to say, like, excuse me, this guy was supposed to be banned. This guy was supposed to be banned, and he's running money. What's the deal with that? And John Corzine, I think, realistically, you know, I don't know the extent to which his critics ended up pushing him to do this. Maybe it's unrelated, but he ended up closing his hedge fund like really just a few weeks ago, just a couple of months ago. And to me, you know, without editorializing, I hear in the way he talks a kind of slow, quiet, contemplative way that he's a man who carries sadness, which we all do. I think that's part of being alive. But he carries his sadness a little bit more clearly than some Wall Street executives do. So when people become successful in finance or any industry, I think sometimes they become kind of smooth and jovial, or at least exude a sense of success. And one thing that I enjoy about interviewing John Corzine is that rather than pretending that all is well, he certainly has a kind of air of almost melancholy that I think you'll see in the interview tonight. And you know, I think that's also another universal thing. I think we all do to some extent. Sometimes we pretend otherwise, but I found it refreshing to sit and see that.
Another great episode, Max, and we love when you join us and describe these things. You're so thoughtful, so really appreciate you joining us this afternoon.
I appreciate you and your warm words. It really means a lot to me and to the wonderful colleagues who work on the show.
Thanks, Max.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. A personalized vaccine developed by Merck and Moderna helped prevent the recurrence of severe skin cancer for 3 years in promising new results from a study. The companies say patients with severe melanomas who got the vaccine and Merck's cancer drug Keytruda were 49% less likely to die or have their cancer return than those who got Keytruda alone. Melanoma accounts for only about 1% of American skin cancers, but it does cause most of the annual deaths from the disease. Merck shares today down 0.4%. Moderna was up 9.25%. Cruise, the self-driving vehicle unit controlled by GM, has dismissed 9 top executives, including Chief Operating Officer Gil West and the heads of legal and government affairs. And with more on the story, here's Bloomberg's Kimberly Adams.
Charlie, the company is trying to regain the trust of regulators and the public following an investigation by California regulators into an incident in which one of its cars struck and dragged a pedestrian for 20 feet. Regulators say Cruise withheld a key video that showed the pedestrian under the car. The departure of 9 executives was announced in an internal memo sent to employees. It follows the exit of Chief Executive Officer Kyle Vogt and the grounding of the company's robotaxi fleet in the 3 states where it was operating. The company also faces potential fines for not disclosing all details of this accident. Charlie?
And that's Kimberly Adams reporting today. General Motors shares did advance 6.5%. Those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. National Security Advisor Jake Sullivan is in Israel today, where he's been speaking with high-level officials about the military campaign against Hamas. The State Department's Matthew Miller refused to go into any specifics, though, about the strategies being discussed.
We have these conversations with our Israeli counterparts at a range of different levels and talk with them about steps we think they can take to minimize civilian harm. We've seen them take some of those steps. There are always things that we think that they can do better, and we'll continue to engage in conversations with them to that effect.
Miller says the U.S. continues to press for another pause to allow more hostages to be free. President Biden said at an event today he wants Israel to be more careful in attacking Hamas. Russian President Vladimir Putin is back to holding his marathon end-of-the-year news conference for the first time since the invasion of Ukraine. Bloomberg's Greg Sullivan was monitoring from Warsaw and says the issue of detained Americans came up.
We heard about a potential prisoner swap for detained Americans, Evan Gershkovich, who's a journalist with the Wall Street Journal, and Paul Whelan, a former Marine veteran. Putin said that he was seeking an acceptable deal for his side. So very interesting, especially since a court this morning in Moscow ruled against releasing Gershkovich early.
Bloomberg's Greg Sullivan reports the war in Ukraine also came up early at the news conference. Putin says the war will continue until Russia achieves, quote, denazification, easy for me to say, denazification, demilitarization of Ukraine and its neutral status. There were plenty of train delays today near Newark Penn Station due to a bull that was on the loose. The delays lasted nearly an hour. The bull was eventually cornered by police and taken to a local animal sanctuary. It's still unknown where the bull came from or how it got onto the train tracks. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Tim and Emily.
Thank you so much for that update, Nancy Lyons. Really do appreciate it. Can't get enough of that bull, can we?
I can't believe they still don't know where it came from.
Have they checked? Was it Jay Powell who unleashed the bulls? I mean,
I think so.
They need to get in touch with the chair of the Federal Reserve, see if he's missing his bull, because bulls were on parade. You sent this story to me, Emily, and usually when we talk about rents in Manhattan, we're talking about them going up, but things don't always go up. They can't go up forever.
Manhattan rents fell annually in November for the first time since mid-2021. New leases were signed last month at a median of...
Don't say it. Wait, this means that we're going to go and everyone can get an apartment now? If they want one?
$4,000.
Oh, median of $4,000.
Yeah, that's a 4.6% drop from October, but it's actually still 11% higher than it was in November 2019. I'm a Manhattan renter myself, so that's why I chose this story, because it's not cheap.
Okay, so Jonathan Miller, the president of Miller Samuel, who is quoted in every article about Manhattan rents, data comes from him. He says, it's beyond seasonal. It's not a weak market, but it's weaker than the frenzy of the last couple of years. So what's happening to rents in Manhattan is what's happening everywhere else. Things are cooling off a little bit. We're seeing that with the inflation data that we get with PCE and CPI. We're seeing that with other price